Let's dive into it today. Everybody's asking, how do you play this government shutdown? Well, we're going to answer that for you. You guys are going to want to stick around. Let's get into the show. I do want to showcase a couple of things here first to just kind of show you where we are right now. The potential shutdown is rising dramatically as we get to 87% right now over on Polymarket. And what this might mean for the market, of course, everybody might look at this and go, hey, that means don't buy right now, because of course investors should not worry about the shutdown. Of course, is Kramer. Sometimes you trade him inverse, but I think he actually may have called the bottom on Bitcoin the other day, which was when he said, hey, go out and get crypto. And it was a good move. The other thing that's playing into this is when you look at this happening in less than 18 hours, Democrats and Republicans are deadlocked right now on funding the government. 54% of stock markets do go up during the shutdowns, and 46% of the time they go down. So it's kind of a split number. But 12 months later, markets are usually positive. So at least if you're looking out across how to play these markets, this is a good example. Now, we're going to bring a guest on here in a minute, and we're going to dive into how do you do this maybe through the eye of using a Bitcoin loan or using a digital asset loan. And it'll give you more of a strategy play that I think you guys are going to want, because when you look at all of this, the big issue is really going to boil down to one thing, and that is, how does the dollar hold up against digital assets? I want to go to a clip real quick. This is Bloomberg talking about if the dollar will suffer. Take a look.
I think overall what government shutdown means is not major economic impact unless it extends. And obviously we don't know how long it extends until we see it play out. The assumption is it'll only last a short period of time and then we'll move on from it, which means that the underlying trends continue, because we generally get a not only kind of a delay of some data, but we get suspicion of the data that we do get. The underlying bias there is still to slowly reduce those long-term exposures to the dollar, and I think that is the path of least resistance, is a slightly weaker dollar over the coming days and weeks.
All right, so weaker dollar means risk on, guys. This is going to where you're going to acquire more Bitcoin, more Ethereum, those kind of assets out there. So we thought, let's bring in one of our partners. This is Dr. Hunter Albright, who's the CRO over at Salt Lending. How are you, Hunter?
I'm doing well, Paul. Great to be here.
Nice to see you again. We had you on not too long ago. Very popular video, by the way. And everybody was saying, hey, this is the time to maybe look at lending in general. Give me a quick rundown on Salt, what you guys offer in terms of assets right now that are on the platform that I can go take a loan against.
Yeah, so Salt's the original Bitcoin lender, been around since 2016. We lend against Bitcoin, Ethereum, and stablecoins are the primary assets that people take advantage of from a lending perspective.
Yeah. If you look at the market, you've got October coming. And listen, we have had some big run-ups here in October in these past years. If you look all the way back into 2019, with our biggest run-up, which was right there in 2021, 39%. That was during the last major market uptick and bull run. And a lot of times people would say, all right, well, what are ways that I can really prep and maximize this? And strategies usually go either in, I need to buy more Bitcoin, or how do I buy more Bitcoin if I'm already locked into Bitcoin? And that opens up the opportunity of lending against a certain amount of Bitcoin. When you look at strategies that investors are taking for you guys, Hunter, what is the number one area that you find, like your perfect customer that comes in and says, hey, I've got X amount of Bitcoin, this is what I want to do with it? What are you guys finding as kind of the leader for that?
Yeah, I'll talk about two different scenarios that we're seeing frequently. One is, we know that there's people out there, and we work with a lot of people that have a lot of US dollars today. And so they're looking for opportunities and timing about how do they start to convert their dollars into Bitcoin. And I think especially with sort of the market instability, the market sort of volatility that is potentially coming, right? It creates a great opportunity for people to think about, how do I take some of that dry powder and start to buy in and buy Bitcoin, especially if there's concerns about the value of the dollar. On the other side, or another scenario that we see a lot, is people that have Bitcoin and then are borrowing against their Bitcoin to buy more Bitcoin. And that has a couple different sort of opportunities. You're increasing your exposure to the asset. For a lot of our customers, and this is not financial advice, but a lot of customers will buy Bitcoin, put it back into their collateral portfolio to further lower their LTV. So it is a
Okay.
strategy that they're taking part in and executing in order to get sort of long-term exposure. And as you and I were talking a little bit before the show, there's other things that go into that. What is people's time horizon, short-term, long-term, but also how much of their portfolio are they doing that with? And they're, depending on their own risk profiles, they can start to think about how they want to position their portfolio for both near-term flexibility by having an asset they can borrow against, but also longer-term gains for what they're trying to do on their wealth creation.
Well, and you look at long-term gains, typically people will lock in on a handful of assets and look to hold those over a long period of time. Gold is a good example of one. Bitcoin has been highly correlated to gold with like a 8-week lag right now. Gold hitting all new highs. Could Bitcoin be right behind it? And if you look at where Bitcoin is right now, some people would say, hey, listen, I have some Bitcoin, but I want to acquire more because I feel like we're going to see a potential uptrend here. Is that the timing in which you would go into someone like Salt Lending and say, now is the time I want to do a Bitcoin loan?
So I would encourage anybody that has Bitcoin, hasn't tried a Bitcoin loan or a loan against Ethereum to start small and try it, right? You need to learn the mechanics of the tool so that you can leverage it in your portfolio. But once you have those basic skills, right, there's a lot of different scenarios that you can take advantage of it. I think in this period there are going to be people, if people get laid off and are impacted by the government shutdown, there's going to be a group of people that might be looking at borrowing against their Bitcoin just to make ends meet, to meet payroll in their businesses, to pay expenses on their personal life. And then on the other side, there are going to be people that can take advantage of potential drops in the price to buy in with dry powder or borrowing against other assets that they have to take advantage of that market opportunity.
I was looking at this right here. I didn't realize how big this market is growing. This was $1 billion in loans taken against Bitcoin. This was over on Coinbase. And what we're finding now is all lenders, now there's multiple lenders out there, Salt being one of them, that are really kind of leveraging the overall market. I'm kind of curious, Hunter, what do you guys think the market potential is here just in the next couple of years for digital asset lending?
So we see it continuing to grow with sort of the market as a whole, but with a lot of new entrants. I was in Asia Pacific sort of a month and a half ago. And just even as we start to see the global demand, both from an individual perspective and then companies, I think that's going to drive the price up because more people are going to want to buy in, but will increase the amount of lending that is taking place because all of those Bitcoin owners are looking for liquidity. They'll need it either for emergency or specific purchases, or they're going to use it to make additional investments in their business or in other assets from a personal perspective.
Yeah, I'm looking at kind of the array right here. New players rapidly building out the financial services stack. You guys, of course, are listed there in the loan section with others. And brokers, exchanges. This is kind of a new era of a lot of new finance companies and fintech in general that are really taking over. This is an interesting component because when you look at the mechanics of how the market works and the opportunity that brings, it's really going to open up, I think, some big opportunities for guys like you. Talk to me a little bit about when you get into putting a loan together, because this is something you just mentioned in terms of a skill set. Understanding LTV, and I know there's 3 different areas. There's kind of the more conservative, a little bit more aggressive, and then super aggressive. But explain that on your platform and how it's used. I'm going to open up the platform to kind of show people, but talk me through that.
Yeah, I'd be happy to. And then the first thing I want to say is I think you're right. I think there's big changes taking place, right? I think what we're seeing is really the democratizing of wealth building. And so coming along with those tools and the assets that anybody can get access to now is people need to learn about it. And the wealthy have been using leverage, have been borrowing against their assets for centuries in order to get an advantage, in order to be efficient with not having to pay taxes, being able to sort of get liquidity at a value that they've already created And so with the digital asset with Bitcoin, that's continuing. And now with all the other tools and the ecosystem that is being built up around the assets, it's really important for people to understand the different tools and then increase their own financial literacy so they can take advantage of the strategies and tactics. And so what you're talking about here, and for anybody that takes out a Bitcoin-backed loan, a digital asset-backed loan, one of the key mechanics to understand is the LTV, which stands for loan to value ratio. And so you can think of a 30% LTV loan as being much more conservative, right? You can absorb a price drop of up to around 67%. So you don't have to worry about margin calls. You don't have to worry about sort of stabilization or liquidation, depending on the lender you're with, until there's been a drop of around 67%. So we see people that are taking out loans to fund retirement, people that are taking out loans against their nest egg, which is almost all in Bitcoin, tend to skew more towards the 20-30% LTV to take a really conservative approach, knowing that they probably were going to want to take out more money on an annual basis or on a regular basis to sort of fund their lifestyle. And then we see customers that are taking out loans that are in the 60 to 70% LTV ratio, where they might be leveraging a smaller percentage of their overall portfolio, but they're trying and have a more short-term goal of more rapid growth and wealth building. And so they're willing to take on that risk. They might also have dry powder and additional assets that they know they can bring to the platform should they need it. But they're choosing to use a loan in a more leveraged way.
So, okay, so you get someone that's doing a 30% LTV. What are you finding? What are they using it for? Are they going back into the digital asset space? Are they trying to use it for, where is the arbitrage being played out in the markets right now?
Well, I think for some people, they are in the lower LTV range. They're borrowing against it to live their life. They're retiring off it. They're funding their lifestyle. But others are borrowing to invest either in more Bitcoin and digital assets, but also choosing to, and this is a new trend. In fact, we were working with a scuba company recently who bought Bitcoin about 2 years ago. They're now converting a percentage of their revenue on a regular basis into Bitcoin. And they are starting to borrow against it in a conservative way to fund business investments. They want to add in a new location, add in a new product line. And so I think it's going to be a really exciting time, not only for individuals, but real small and medium-sized businesses about how they start to think about using Bitcoin so they don't have to rely on some of the more traditional methods.
Yeah, well, I mean, in the past, it's always been taking a loan out against the equity in my business, taking a loan out against the equity in my homes or my real estate investments that I've had out there. This opens up a whole new array of strategies because me as a Bitcoin investor, I can go out and buy, half a Bitcoin today, a tenth of a Bitcoin, whatever I might need at that time, and then just build that pile up and know that I've got an asset there that I can take a loan on and not pay taxes on my capital gains since I'm not taking them. It creates a new strategy for sure. Are you finding businesses, because this is the one area that we're seeing a lot of growth in, is business owners that have kind of figured out this hack and are starting to implement this. Is that, what would you say right now? Is it retail or businesses that are most popular on your platform?
I would say, we have a large retail portfolio, but in terms of more recent interest over the last 3 to 6 months, businesses are rapidly trying to come in and get educated and understand how they do it, not only with what Bitcoin they already have, but how they get started. I think the exposure that the MetaPlanets and the MicroStrategies have brought to treasury management in general and how to use Bitcoin within that overall approach and strategy is elevating the number of companies that are trying to get smarter about doing it, because not only can they benefit financially, but they also benefit from execution speed. They don't have to go to a regional bank to go through an underwriting process. If they want to borrow against it, they can do it within sort of 24 to 48 hours and have cash in their business. We've worked with restaurant owners who have had to borrow against Bitcoin just to meet monthly payroll because of a drop in visitors to the restaurant. So having that flexibility and that agility I think will pair really well with the appreciation forecast for the asset, and how companies can think about not only growing the value of the business, but funding it in a way where hopefully the owners can retain the business equity and continue to build up value on that side as well.
Well, and in many cases, I think a lot of people, and this is something that we're working on in terms of a strategy with one of our financial advisors, is how do we leverage against digital assets, reinvest that into businesses to create more equity play? Because now you're really building on two equity piles. You're building on a Bitcoin equity pile, and you're building on a business equity pile, which is like, I feel like it's almost unfair in the sense of it's like a hack. And it's a great one, because normally you don't see assets moving like what we see with Bitcoin out there.
Right.
I want to showcase one article here. Institutions now holding 18% of total Bitcoin supply. And here's my question. With this much institutional investment into Bitcoin, do you think we are at a point right now where Bitcoin most likely is going to stabilize and we won't see these massive drawdowns in the markets that we've seen on Bitcoin and other digital assets in the past?
So I don't know where the price is going to go.
Sure.
I do think we're going to continue to see volatility, but it will start to narrow. I think people are really getting the message that, you don't want to sell your Bitcoin. You can get liquidity out of it in other ways. You can leverage it in other ways. I think the portability of it, the divisibility of it is, the scarcity of it is really going to continue to drive a lot of interest, where as long as there continues to be an ecosystem that will support all of the services around Bitcoin in terms of borrowing against it, and then leveraging it in different ways, buying it, leveraging it, and then sort of custodying it, then I think we'll continue to see more businesses as well as more individuals start to get in to understand how they can participate. And then my own sort of thinking is that we're 5 to 10 years at a minimum away from sort of more stabilization, from a sort of slowing down of the growth. Because I still think we're super early in terms of the understanding. Because I think what we're seeing is not only do we have to have people start to understand more about the asset Bitcoin, but you then have to start to understand how to use it. And I think all of the coverage recently is helping to get more people to be curious and be interested in understanding more about Bitcoin. And now they'll start to buy it, they'll start to leverage it, they'll start to use it in different ways. And then that will encourage them to grow their own stack.
Have you seen strategies that take out loans on Bitcoin or Ethereum? They look for the market to move up. Then they're bringing that loan to value ratio down because they're making, maybe interest payments or maybe they're going at principal. What have been some of the bigger strategy concepts that you've seen where we'll use retail in general right now, that help them kind of manage that risk as whether the markets go up or down over these cycles of 3-4 years? How have you seen their approach on loans that you guys are giving out?
So a couple different things I would say there. I mean, we definitely have seen people, and in fact, we have a customer that bought a Tesla Cybertruck by sort of being able to leverage his Bitcoin enough where he then went out and purchased a truck and branded it all Bitcoin. And some of the strategies that are employed in those situations is they'll often start out with a low LTV, wait for a dip and then borrow against it and then buy at the dip and then sort of let it appreciate and then look to do the same thing. And so look at different cycles and different periods of the market where they can take advantage of the additional headroom that they have with their loan, borrow against it and buy more assets and put it back into their custody wallet. I mean, additionally, we know that people keep dry powder on the side. They have sort of stable coins in custody wallets as well, and they'll convert the stable coin or the USD into Bitcoin when they see drops in the market.
Okay, so you guys offer a service called Salt Shield. I'm looking at it right here on your website. And this is something that, in my understanding, when I talk about this to people, everybody's worried about getting liquidated. When a market drops or
Yep.
you see a flash crash, the idea is to stay low on the LTV and you're going to be fine for most part. But when you look at Salt Shield, how does this work on a loan that let's say somebody's at a 70% LTV, a little bit more aggressive? Is that when they would use something like Salt Shield?
They could. I mean, the Salt Shield pricing varies based on the LTV of the loan. So the lower the LTV of the loan, the lower the price it is to enroll in the Salt Shield program to protect from liquidation. I do want to mention the other thing that Salt does in particular. We had created an offering, a feature of all loans called stabilization. So that at sort of when you reach 90.91% LTV, your assets, if you enroll into the feature, get converted into stablecoin. So it's not a liquidation, it's still your assets. And then if the price continues to drop, you could move it back into Bitcoin. But it basically allows everybody to take a breather. What's that?
Does that create a tax event?
We advise people to talk to their own accountant regarding that. The assets are still being managed by Salt as part of that process. And we've seen opinions go both directions.
Interesting. Okay. All right. So when I'm eligible, I pay the fee for Salt Shield. What does that do in terms of protecting me against a liquidation? Do I get additional time? Is it something that I'm adjusting down off of the loan balance? What is the opportunity there?
So if you've enrolled in Salt Shield until the maturity date of your loan, you're fully protected from any liquidation.
Okay.
So the price could drop, the price could drop 90% and you won't get liquidated. So when your loan comes to term, then you have to settle your loan, and if you want to renew it or extend it out, then you have to bring it back into good terms. But until the maturity date of your loan, you are not at risk for liquidation.
All right, so that's a handy thing for those of you who are out there kind of thinking about that. One last thing I wanted to hit on is the number of assets, and specifically, obviously, we see Bitcoin, Ethereum in there as kind of the leader. I know there are some others that you guys. Why would someone take a loan against, say, Tether or USDC? What would be the reason for that? That's a stable coin.
So the biggest use of stable coins that we see is to take out volatility of Bitcoin. So we see people putting stablecoin into their custody portfolio to reduce the risk, the volatility of the value of their overall collection of assets.
Gotcha.
The other thing, so that's it's used as a tool to take out some of that risk.
Mm-hmm. What about adding more assets into the portfolio? Are you guys looking at bringing more assets on?
We are. We continually evaluate what assets we can bring on. Really, we're looking at the overall market cap size and the liquidity of the assets.
All right. Well, listen. I think the key here right now, if you were trying to coach somebody that is a high net worth individual or somebody just brand new to Bitcoin lending, where would you have them go in terms of LTV? I'm assuming you'd go with the low end on the 30% loan and just be safe. Get out there, try it out, and then start utilizing it to your benefit.
I mean, to be honest, I probably would recommend people come in around sort of a 50% LTV.
Oh, okay.
Because I think active participation in a small loan is important.
Gotcha.
We want people to learn how to understand the margin calls, to understand how to add more collateral, so that if you did need to take out a higher LTV loan, you'd understand how to manage it responsibly and feel comfortable doing that. For the people that are taking out the lower LTV, they have a different comfort level. I think a lot of people are trying to just almost set it and forget it.
Yeah.
Because they're retiring and they don't want to worry about it. But I think it's worth everybody learning the skills of how to manage a Bitcoin-backed loan and understanding a technology, right? Sort of a ability to leverage sort of margin calls and borrowing against an asset that many people have never been exposed to. So really encourage people to try it out and use it before you really try to take a strategy one direction or the other.
Yeah, this is the way that wealthy people do it, guys. So you guys, of course, go over and visit saltlending.com. Use our link down below. We do have a custom link for you guys, so you'll land on the PBN page over there. Get started. There's some special offers over there, and at least get into the game, because I think this is one of those things long term that really starts to set portfolios apart. Hunter, thank you so much for coming in today. I appreciate it.
It's been a pleasure. And Paul, just also to note, we have pulled together a playbook to help people understand how to borrow against their Bitcoin. That is available at the saltlending.com/PBN link.
Perfect. Okay. We'll definitely leave that in the description down below, so you guys use that. Is it like a PDF that they download for free?
It's a PDF. Yeah, we put together a playbook that walks them through the different risk profiles, the LTV, and has some interesting use cases that they can start to think about how they can take advantage of their assets.
I like it. I like it. All right, man. Thank you so much, Hunter. Take care.
Oh, it's been a pleasure. Thanks, Paul.
All right. You guys, if you're not in on the Diamond Circle, you guys can get in our own private group out there. And the way you do that, we'll also leave a link down below. All you have to do is click that. You can join for free. And of course, catch me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.